Welcome to the Financial Battle Hub. So I want to give you an overview today of the only strategy I would use if I had to select one for the rest of my life. Here at Battle of the Financial Markets, we are playing a game called World War III and passing the information over to those so folks can pass their prop firm. But if I was going to trade only one strategy, this would be the strategy I would use for the rest of my life. Well, actually, there are two closely related approaches. One, to catch the bigger move from the start, and the other to jump into the move after it already has begun. How many times have you found yourself looking to get into a move as it's already started but cannot capture it or add to your position? That's why this strategy is so important. Traders who can stick to this method are going to win and win a lot. This strategy works across futures, forex, stocks, cryptos. It does not matter, even if you're looking to find your line in the sand for trading options. If you want to trade the market with confidence, accuracy, and consistency, you need the right strategy. Otherwise, you'll keep losing your hard-earned money. We see that over and over. 95% of traders fail. And I know you're tired of that. In today's video, I'm going to share the only day trading strategy I would ever use and use it every day. It's called the imbalance transition strategy. This is my favorite strategy because it single-handedly turned me into a professional trader where I started all the way back in 1991. Yes, I've been trading since 1991. It's also the core strategy I teach in our live trading community, and I've watched countless traders use it to pass prop firm challenges and build successful careers. I love this strategy so much that I can't wait to wake up in the morning to trade it. And if you could only trade one strategy for the rest of your life, this would be it. No questions asked. In the video, I'll walk you through every detail I've learned about the imbalance transition strategy over decades of trading. As always, I'll back everything up with real-time live trade examples so that you can see that this strategy is the real deal by viewing our live streams every day, Monday through Friday, 8 a.m. to about 10:30 Central Time. So let's get started. All right, friends. Today we're going to dive into the imbalance transition strategy. Like I said in the intro, if I had to trade only one strategy for the rest of my life, this would be it. Most people who see it feel the exact same way. There are two big reasons why. Number one, it's highly effective because it focuses on high probability setups. And secondly, it's very simple to master after you get it set up. There are only 4 moving parts to this strategy: setting up your chart correctly, mark the imbalances, and identify momentum, and last, wait for the entry. It's that simple, a straightforward process. If you can follow these 4 steps, you'll understand this strategy and be able to implement it across different time frames. So let's go ahead and look at step 1. Let's start at step 1, setting up your charts. You can start with whatever you want to trade. It doesn't matter if it's forex, crypto, commodities, futures, stocks. For example, though, I'm going to use NQ futures. So let's go ahead and switch to a 5-minute chart. Now that you have the 5-minute chart in front of you, you can see what I have done on the 5-minute chart is that I have marked all the imbalances. So you would set up your chart, whether you're using TradingView, NinjaTrader, Sierra charts, to find an indicator that'll mark the fair value areas. Now that we've set up our 5-minute chart and we've marked or had an indicator that marks all of the imbalances or the fair value gaps, and also added the 8 and 14 EMA on our chart, and then the EMA color indicator, which is important. This color indicator, as price moves above the 14 and the 8 EMA, The indicator colors the bar green for up. Once there is a close below the 8 and the 14, the bar would turn to red, or as I have it, black, to tell me that we need to move down. These are the three indicators that are on this 5-minute chart that we call the battle map. Now that we have these marked, let's go ahead and take a look at the examples of what we would do for trading. For every fair value gap, I do not have them automatically marked, but I would mark 50% of those areas, or what we call half back. A good example would be marking this area. If it pulls back into that, we would play that for a short because the 8 and the 14 are down. Another example would be here. This one played for a move down. So as we do this or move in these areas or have these marked, we are managing all of those across our time frames. Another example to show you if we were moving up in the chart, this would be an area we'd mark half back. And as you can see, it plays into this area and then continues its move up. So this area of this trend to get on the bigger move is important to us as we are showing these examples using the imbalances to trade. Across any of the time frames, you can see that they end up working out as I mark other 50% half back areas. This would be another one. It's marked. So as this plays from this perspective, this gets missed. That's okay. Out of there, I will show you on the 1-minute chart of how we will use that as a transition to get in when it is missed as we are falling below. Another one that we could mark would be here as this plays and pops back up. We are above. There is a small transition for a period of time for down, but we are still looking for long since the 8 and the 14 are above. The down bar closes below here for an indication, but the 8 and the 14, the 8 is still above the 14, so here is a long that plays several times as we were moving up in the trade. So by this example, you can see why this strategy is very important to us as we look for the bigger moves to continue on the move down. From a second perspective, we would also look to end up playing our 1-minute transition strategy, and that is shown off of a 1-minute chart. Since we are in a 1-minute chart, how this works for us as we have this set up is we still have an 8 and a 14, but we use the 5-minute time frame to mark the 8 and the 14. So once the 8 and the 14 crosses over, we would be looking for shorts to move in the direction, meaning down. Every time we pop above, we would look for a short. And this indicator is a color-based indicator off of swing trades, high or lows. This is a swing high, and as it changes and the next bar closes below its low, the indicator marks this red. So we would look for a close below for a short, and as long as we don't close above this candle that is red's high, we are continuing the trade. So this would work out for a short. This is another short. Here is another short. Here is another short. Not much of a move. Now we move above. So we're looking for the next time that it signals for us for another short, and you can see that it does here. Since we are below the 8 and the 14, I am not looking for longs. I am looking for shorts to go down. As we put this together, I want to highlight something that is very specific to us as we do this. We have a trading desk, as you can see. We have a 5-minute on the right-hand side that we just talked about, showing us our imbalances. Let me clean this up a little bit. And on the left side, we have our 1-minute transition. So we use both of these together. The 5-minute chart allows us to get on the bigger moves. And if we miss the move, we are able to get back in or add to the position. I had marked this imbalance, which looks like it is marked incorrectly. Let me remark it so we get it right. Here we go. It's missed it by 1.5 points. on NQ. But I'm going to show you or highlight this area. Since we missed this, if we'd be looking for a short here, are we still able to get in? And that is what makes this strategy so unique. And this price action, as I come over here and look, you can see my crosshairs on the 5-minute chart to the right are exactly right here on the chart to the left. Since it's missed, I have an indicator here telling me to get down as well. So if I did not get short on my 5-minute, here's my opportunity to get short. Here's my next opportunity. Once I close below on the 1 minute and I don't go above here, I am looking for a short. Here is another short. And you can see to the right that this area here just keeps moving down and gives us multiple trades to get in because we can see the momentum is down because the 8 is below the 14. So as we are moving down and we miss this trade, we would look for another opportunities to get in, and we have those. This is what I highlighted for an imbalance for a short here as well. You can see on the chart, this is the area for the short. So once this is short from this perspective, you can see that we are moving down. You can see it on the chart over to the right as well. And as long as we don't go past this high, we have an opportunity to continue. The market closes, this happens to be a Friday, but moves down from our imbalance. So even if you did not get in on the 1 minute, the imbalance played from 192, and the low from here is 145. So you're looking at more than 50 points. So you can see why this strategy is very important to us. It is about highlighting the key areas of momentum and getting in alignment with those trades. We want to trade in the direction of the market and what it is showing us. The approach removes emotions and removes the guesswork and stops the hopium that it's out there. It highlights high probability trades. Now again, not every trade will work, as we had said, or I showed you on the FVG, not playing here, but you have other ways to get in. Nothing is 100%, but this system was developed to create consistent profits time and time again. At its core, the imbalance transition strategy is based upon auction theory. Markets consistently move back and forth, balancing price action or seeking balance. And we take advantage of this by trading into the imbalances, the voids, the single prints, the FVGs, whatever you want to call them, gaps in the auction theory. Price tends to fill these areas after liquidity sweeps and uses them to manipulate others to not know what's happening. This strategy isn't just limited to the 5-minute chart, as you had seen. It also works on the 1-minute chart and helps us. On that 1-minute chart again, we add our indicator for swing highs and swing lows. We add a 5-minute 8 and 14 EMA. If the candles are red and we are below, we are transitioning down and looking for shorts. This is one of the biggest advantages that you can take advantage of by trading multiple entries or having multiple entries on the way that the market is moving or in the momentum of the market as it is moving in that direction. I hope this video helps you get one step closer to becoming profitable as a trader and passing your prop firms. Trading does not have to be overly complicated. We keep it simple. We stick to the high probability setups so that you can pass your prop firms accounts and build real consistency. There is live trading Monday through Friday Central Time, 8:15 a.m. You can watch us as we are transparent in trading this strategy. Again, this is the only strategy, if I had to pick one, that I would use that is consistent over and over. Please like and subscribe and follow us, and we look forward to answering your questions and seeing you on the live stream.